Hello guys, this is my journal for Wednesday the 23rd of September, and the sell-off continues. It was another broad-based sell-off in the markets today, and as you can see from the market's heat map, it was a sea of red. Equities were down, energy was down, gold was down, silver was down, bond yields were down, the US dollar was up. The US dollar strengthened against a basket of currency, and the US dollar index is now above the 94 level. It used to be the 93 level, but that's gone up to 94 now. And as you can see from here, all the sectors in the S&P 500 were down, from technology to communication services to consumer defensive to industrials to healthcare, financial. It was a broad-based sell-off. The technology, Nasdaq, and the mid-cap Russell 2000 fared the worst of the equity indices. Both the Russell and the Nasdaq were down more than 3%. And that takes me on to the VIX. The VIX, on the other hand, was up today. The VIX was up about 6% to close around 28.58. So the VIX is now getting really close to the 30 level. And actually, over the last couple of weeks, it has been flirting with 30 intraday. So it would go above 30 intraday, but then close below it. So we're yet to see it close above 30 in the fairly recently. I don't think we've seen it close above 30 in at least about 8 weeks, in 2 months. But the move in the VIX today and on Monday suggests that there is some downside protection buying. So fear is coming back into the markets, and investors are buying downside protection. There are now 23 days left until the October contract expires, and I had no new trade ideas today. And that takes me to my open positions. I have now got 2 open positions. I had 3 open positions, but I closed one of them yesterday, SE. So I have 3 positions. 2 of them are open positions. One of them is a trade idea in Facebook. I didn't get filled on that trade idea, but some members got filled and have a position in it, so I'll treat it like an open position, even though I don't have an open position in it. So the first position I have is in BABA. BABA, I sold the 260, 255 put spread, and I believe BABA closed today at 272.95. So even with the massive sell-off in tech, BABA continues to remain relatively strong, and my short 260 put is still out of the money. So BABA, yeah, BABA closed at 272.95. My short 260 put is still out of the money, so that position is safe for now. The second SE is closed. I closed that on I closed it yesterday. I took my profits in that position. For more details in that closed position, you can check the Trade Ideas Alerts forum for details of the closed trade, or click on the link below. The third position is in PDD. On this one I sold the 75-70 put spread, and I believe it closed at 76.64 today. It did sell off with the rest of the market, but my short 75 put is still out of the market, out of the money, but the market is getting close to my short strike. However, at this moment no action is required. So PDD, I sold the 75-70 put spread. PDD, and it closed at 76.74. So my 75 put spread is out of the money by about $1.64. So no action required on that one just yet. And that takes me on to Facebook, which is the position I did not get filled in. Well, people did. So sold this 275, 270 put spread for a credit of $1.52. 275, 270. Facebook closed at 249. So both strikes are deep in the money. Sold at 275, 270. So both are in the money. There are three options available. So with both the two put strikes deep in the money on the Facebook trade idea or position, there are three options available. Option number one is to do nothing. If the expectation is that Facebook would bounce back in the next 23 days and be above 275. If that is the expectation, then the best option would be to do nothing and leave the spread as it is. Option number two is to do nothing for now and simply to wait for Facebook to bounce back up to around the 258, 259, maybe 260 level, and then sell the 275, 280 call spread for a credit of $1.30 or greater. So if Facebook gets a bounce, the call options would increase in value, and then you'd be able to sell the 275, 280 call spread for a decent credit. At the moment, the 275, 280 is some distance away from at the money, so the premium in there is quite low. And the reason I chose a 275 is that would convert it into a covered straddle, if you like. You're short the 275 put. So to sell the 275 call would be converting it to a covered strangle. That would be the ideal situation, but for that to happen, Facebook would have to bounce from where it is, move up from where it is. And option number three is to adjust the position straight away and go inverted. And what I mean by inverted is you would have to sell a call spread around at the money, and the strikes for the call would be lower than the put spread. For example, selling the 260, 265 call spread for around $1.60 when you're short the 275 put. So I mean, you're short 275, which means you want the stock to be below 27, so you want the stock to be above 275, but then you're also short in the 260 call, which means you want the stock to be below 260. And both, that's not a mutual relationship. They're not mutually exclusive. You can't have both of them. But the whole idea for going inverted is to reduce your overall risk. If you sell the 260, 265 call spread now and collect $1.62, that would bring your total credit collected to $3.14. Because I believe this was sold for $1.52, and if you sell the 260, 265 for $1.62, that'll bring in an extra premium, and you'd have a total credit of $3.14, which means your risk in the trade would be $1.86. That's the most you could lose. And with this adjustment going inverted, if Facebook continues to go down, you'd be able to roll the call spread lower and collect even some more premium. or if it goes higher and goes above 275, you could then roll up the put spread and collect some more premium. This adjustment with the inversion, it wants Facebook to move in one direction or another. If it stays still, you realize the maximum loss of 186. Well, that loss of 186 is way better than the current maximum loss of 348. And that 348 is, the spread is $5 and a credit of 152 was collected. Deduct that from 5 and you get the maximum loss of 348. By going inverted, you reduce that to 186, and if you could roll it one more time, might be able to mitigate that. In some cases you might be able to roll it twice. I mean, there's still 3 weeks to go. Bottom line is, we're in a damage limitation mode and there are no easy options. That said, I would be inclined to wait until Friday and see if Facebook gets a bounce by midday on Friday. Friday would be 21 days until expiry and would have 3 weeks to go. If it doesn't get a bounce on Friday, I would sell the at the money call spread at the time, whatever the at the money is at the time, and I'll be expecting to roll either side as the market moves up or down. So like I said, there are no easy options. We're in damage limitation, but those are the three options, if you like. Sorry for the pun, no pun intended. 3 options: either do nothing for now, wait for Facebook to bounce and then sell the 275 280 call spread, or adjust the position straight away, i.e. tomorrow, and go inverted. Go inverted by selling 260 265 call spread, or you could even go be more aggressive and sell the 2 Facebook trade. So I said 260 265 call spread. Could be more aggressive and sell the 250 255 call spread, and for that you'd collect 250, you'd collect a credit of 230, and that would bring total credit to $3.82, and the maximum loss would come down to $1.18 if you sold the 255 call spread, which is the at the money. And this thing is 248. The at the money, which has the most extrinsic value, is the 250. So yeah, I'll be inclined to wait until Friday, see if Facebook gets a bounce. But ideally would like to, if an adjustment is to be made, I would like to make it this week. That gives us more time to have to roll whatever adjustment or whichever leg needs to be rolled. 3 weeks is ideal. Anything over 3 weeks, you're cutting it really, really close, and there might not be enough room to roll either leg. So I hope that makes sense. That's the that would be my plan for this Facebook position. The best scenario for me personally would be option 2, but for that to happen, Facebook has got to bounce so I can sell the 275 280 call. And if you look at the 275 280 call, if I sell the 275 and buy the 280, I'm only getting a credit of 71, which means my risk in the trade is still quite high. 152 and 71. Now getting a credit 152. So my total credit will be 223, and that would leave me with a risk of 277 in the trade after making an adjustment, that isn't worth it. And that's why I in order to sell this, I need the stock to move up a bit more so this could go higher. I hope that makes sense. So that's what I would do for Facebook. Now let me go through my watch list. On my watch list, I've got UNG, Amazon, Spotify, Zoom, PDD, and Silver. UNG, so UNG natural gas ETF trading at 12.59. IV is 75. Amazon trading at 2,999. Let's call it 3,000. Implied volatility 64. Spotify trading at 235. Implied volatility at 59. Zoom. Wow, 500. When did Zoom get to 500? Zoom trading at 500. Implied volatility 57. I remember having a spread on this one. I think the spread was 280 something a couple of months ago, and now it's up at 500. PDD 76, 64. Already have a position in this. IV 53. And finally SLV, which is a silver ETF. This one might be below 50. Silver trading at 21, IV 47, but being a commodity ETF, IV hardly ever goes above 50, so 47 is relatively high for this one. So that is my watch list. The end of brings me to the end of the journal. The takeaway for today is for this position in Facebook, and the plan is to give it until Friday. Let's give it until Friday, and let's see if Facebook does get a bounce. And even if it does get a bounce and the bounce isn't high enough and the 275 280 call isn't worth much, we can still go inverted and sell the at the money call spread. But I'll keep an eye on this. I'll keep an eye on this position, and I will post I'll post something in the journal, in the forum, relating to this Facebook position on how to go forward with the adjustment. Okay, thank you very much. Goodbye.